I really like gold. I think gold is going to hit that 2250, 2300. And we're in a sweet spot for the precious metal space. We saw this in 2007, where we see precious metals and miners rally and become one of the leading sectors or asset classes as we go into a major stock market top. It's kind of one of those last moves. We're seeing all the big institutions, they're starting to move in. Countries are buying up gold. I think they see tough times ahead. So they're definitely stockpiling they're reserving their capital in a different currency, right? Not the
Right.
dollar.
After last Friday's all-time high for a weekly close, gold picked right up where it left off this week, setting multiple all-time highs in both the spot and futures markets despite Fed Chair Powell's milquetoast Capitol Hill testimony and parallel all-time highs in equity markets and Bitcoin. The gold market was trading in relatively neutral territory ahead of the announcement and jumped into positive territory in the initial reaction. Spot gold prices last traded at $2,167.60 an ounce, up 0.77% on the day. With a distinguished career spanning years of experience, ChrisVermeulen is renowned as the Chief Market Strategist at the Technical Traders. In his analysis, Chris describes the overall gold picture as bullish, while citing an increased investment interest in gold. Meanwhile, he further compares the current market situation to 2007, suggesting precious metals may become the leading sector as the broader market nears its peak. During that year, the spot price of gold averaged nearly $700 per troy ounce, marking an annualized gain of over 30%. Concurrently, Chris's analysis suggests that gold may experience a similar growth trajectory in 2024, with the potential for significant gains reaching up to 30%. Chris further emphasizes gold's global safe haven status, distinguishing it from the speculative nature of miners and silver. As Vermeulen analyzed the market, he noted a growing trend of institutional investment in gold, viewing it as a shift away from traditional currencies like the dollar. In fact, since the creation of the Federal Reserve in 1912, the US dollar has lost nearly 98% of its purchasing power. The gold price, on the other hand, has multiplied 100-fold. This may seem like a lot, but gold has just maintained its purchasing power. Today, 1 ounce of gold purchases approximately the same goods and services it did 100 years ago. However, Chris voices apprehension regarding silver and mining stocks, highlighting their challenges in fully engaging the market rally. He believes that a long-term holding mentality contributes to gold's upward trajectory, as buyers tend to accumulate and forget about it. Now, we present the clips of ChrisVermeulen's insights from his recent interview with Wall Street Silver. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Gold, you look at the huge multi-decade cycle that has been going through in the chart patterns on the monthly chart, it is pointing to much higher pricing. I mean, when you look at the big picture, it's pointing to 2,700. If we look at the narrower price action, really of just since last October, the chart patterns on the daily chart are telling us about 2,250 to 2,300 here in the next, really maybe the next couple of weeks, really.
Wow.
So it's a bullish picture where there's no doubt it's in a strong uptrend. It's in a bullish phase. Money's piling into it. You know, we are seeing the silver and the miner section still struggle, which is a
Right.
little concerning. They should all be taking part. They all have had a very strong bounce, but they're definitely nowhere near breaking out, and they're struggling. But I really like gold. I think gold is going to hit that 2,250, 2,300. And we're in a sweet spot for the precious metal space. We saw this in 2007, where we see precious metals and miners rally and become one of the leading sectors or asset classes as we go into a major stock market top. It's kind of one of those last moves. We're seeing all the big institutions, they're starting to move in. Countries are buying up gold. I think they see tough times ahead. So they're definitely stockpiling they're reserving their capital in a different currency, right? Not the
Right.
dollar. Gold is a global safe haven. It's, to me, the miners and the silver space are more so, I might be wrong, but I think it's more so like a North American speculative play that Canadians, US are very active. We want to play those. Whereas gold is different. Gold is that every country accumulates gold,
Yeah.
certain cultures accumulate it. And I find people who buy gold are generally people who are holding gold. They're not buying it for a quick trade. They're buying it to like store value and to hopefully maybe sell it at some crazy price way, way down the road. We're talking like 5, 10, 25 years from now.
Yeah.
So that's why I think gold keeps just going up and up, is because it's more so people buying it and then forgetting about it. And that's one of
Yeah.
the best ways for some investments like gold, I think, to that's how I trade it. My focus with asset revesting, which is completely different than what most people do. Either you do the buy and hold, which is nothing, which is high risk, especially if we're going into a multi-year bear market, or you're a super active trader, which is extremely high risk. Almost everybody loses money being an active trader. Asset revesting is very focused on owning only one asset class at a time. We're trying to be in the best asset that's moving in the direction we want. We don't believe in holding assets that are going down. So for example, we're long the equities market. We've been long this last move up since November. When the stock market's not favorable, we move to a different asset class. Could be bonds. It could be the US dollar index. It could be an interest earning ETF where we're just sitting in cash. So what I do that's really differently is, because I don't believe in holding any asset that's going down, defeats the point of investing, is I own one ETF at a time. We're either long the stock index or we're long a different currency. So when the stock market falls out of favor, we sell our ETF on the index, the US index, and we don't own any stocks at all. We actually move our money to a totally different asset. So we're only in the leading or the safest asset at any time that's moving up. And most people diversify. They buy stocks of all sorts and kinds, and they think they're diversified, having all these different stocks. But the stock market is like the ocean. When the tide goes down, pretty much all stocks go down as well. Some go down a lot faster than others don't. But I don't believe in holding a whole basket of stocks that are all going down. I'd rather just step out, move to something different that's going up, even if it's only to earn a couple percent over the next month or two, then lose, a whole whack. So that's what asset revesting is reinvesting our capital into whatever asset is the safest and has a solid trend.
In the interview, ChrisVermeulen discussed the rapid decline of Silicon Valley Bank following assurances of stability from the Federal Reserve. He expressed concern over the cyclicality of financial crises, where banks sell off risky assets, driving prices higher. The Fed and other central banks need to be alert to the rising risks and prepare to end QT soon. The end of the BTFP is unlikely to put banks out of business, but it could be one of a series of blows that kick off a new crisis in the months ahead. Moreover, Chris believes that losing faith in the United States money printing strategy could lead to losing confidence in the US dollar, affecting both assets and currency. Let's get back to the interview.
Silicon Valley Bank. I swear it was like 2 weeks before that, the Fed came out. They're like, the banks are stress tests. We're all good. We're not going to have the same thing. And then in 48 hours, a bank literally goes under and they have to like bail it out. They're literally throwing Band-Aids on these things so fast to make it seem like it's nothing. Like, oh, it's just a little thing. We'll fix it. No problem. Everybody's good. We'll pay you. The people who have money in that bank who literally would have lost it. The government's like, oh, we'll give you money back if you lose it. Things are brittle, super brittle. I mean, it's human nature to over leverage, buy the house that's a little out of your league. Stretch to the, you spend too much. The banks do the same. They take our money and then they go and they leverage it like 40 times. And then they go and blow it all up and lose it. Hence, like the whole financial crisis last time, they just start selling off junk and driving up prices and the can as far down as the road as they want. Eventually, the whole world and people will be like, the US, I'm just picking on the US. The US is a joke. They just bail themselves out. They keep on going. They're just, they're just kind of resetting and keeping things going. Eventually, though, that'll catch up and people will be like, well, it's a joke because they can't go under because they just print more money. That's when when the whole world goes, this is ridiculous. Just do everything in the States because you get bailed out. That's when actually things will start to break. The currency will lose its value. Everybody will realize, it's probably not going to be a good investment, the dollar. And people have been talking about a dollar collapse forever. And I think it's based around this whole theory of it's just keep throwing money out, patching things up and bailing people out and going into more debt. I mean, eventually it will catch up. And the currency, I think, will probably be what gets hit really hard. Along with assets, I think it could, really hurt everything in the States, and the currency will be definitely the big one because it's obviously the global reserve currency. But when it starts to crumble and really tank, it could definitely change.
The bullish trend in the gold market is currently very strong, exhibiting significant strength and momentum. With gold consistently setting new highs and demonstrating resilience despite various market conditions, investors are increasingly drawn to its potential for further appreciation. Given the current trends in the gold market, how do you plan to integrate gold into your investment strategy to capitalize on its growth potential amidst market uncertainties? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.